The reducing balance method of depreciation is not the most common or easiest method used to depreciate assets over their lifespan. However, it is more accurate for working out depreciation of assets that lose a lot of value in its first few years of acquisition. I'm Adam Selby and welcome to The Accounting Student, where we create free and short videos so that you can learn about accounting. Today's video is looking at what is the reducing balance method of depreciation. The reducing balance method is one of the main methods to calculate the depreciation of an asset. If you don't know what depreciation is, it is the reduction of value to an asset. Additionally, you can find out more about this on a previous video called What is Depreciation? Let's go back to the reducing balance method. The reducing balance method of depreciation is a technique used when an asset's worth will decrease in value by different amounts each year. In order to find out how much the asset is going to be depreciated by each year, the following factors need to be identified. The cost, the residual value, the useful life, and finally, the last factor is the net book value. After each year, the asset's value after depreciation is then used as the opening value for the next year in replacement of the cost. Rate of depreciation as a percentage equals 1 divided by its useful life times by 100. Now let's have a look at this with an example. Casey, a taxi cab owner, bought a new car for £20,000. She expects the car to have a useful life of 3 years, after which she will upgrade the car, and she assumes that after the 3-year period she will be able to sell the car for £7,500. What will Casey's charge per year for depreciation to the new car be if she uses the reducing balance method? To work out the annual depreciation on the car for the first year, you take the cost, which is £20,000, and minus the residual value, which is £7,500. This leaves you with £12,500. You then take the £12,500 and divide this by the useful life of 3 years, and this results in a depreciation of £4,167 for the first year. To find out the NRV, you need to subtract the depreciation from the cost after residual value. This gives you a total of £8,333. For the second year, you'd have to use the NRV, not the cost, so you'd use £8,333 as your opening figure instead of £12,500. So to depreciate the second year, you take your £8,333 and divide that by 3, which gives you £2,778. You then have to find the NRV for the third year, so you take your £8,333 minus £2,778, which gives you £5,555. For the third and final year, you do the same as what you did for the second year. So you take your £5,555 and divide that by 3 years, which gives you your £1,852. This is the depreciation for year 3, and to find out the NRV, you need to subtract the depreciation from the cost after residual value, which is £5,555 minus £1,852, which leaves you with £3,703. So now what we need to do is we need to add up all the depreciation rates for all 3 years to give us a total depreciation charge. To make things easier, I've made a table which shows in red the depreciation charges and in green the net book values that will be carried on to the next year. If we add the 4,167 from the first year, the 2,778 from the second year, and the 1,852 from the third year, that gives us a total depreciation charge of 8,797. Here's a reminder of the rate of depreciation as a percentage. You take your cost, minus your residual value, and times it by your depreciation rate, and this gives you £4,167. But because it is reducing balance, you need to make sure you use the net realisable value for every year after the first year. If you don't know how to do this, you can have a look at our previous video, which gives a more in-depth description. So that was the explanation of straight line method of depreciation. If you enjoyed it, press the like button. If you have a question you want answered, leave it in the comments below and we'll try to answer it. And if you're not already subscribed, make sure you click on the big red subscribe button above to keep you updated with the Accounting Student. Thanks for watching and we'll see you next time.